All right, let's break down this indicator step by step. This tool is called Volumized Order Blocks by Flux charts on TradingView, and it's designed to help you identify where smart money is entering the market. In simple terms, it shows you high probability zones where price is likely to react. Now, let's start with the colored zones. The green zones represent bullish order blocks. This means large buyers stepped into the market at that level, and price moved up strongly from there. So when price comes back to this area, there's a high probability it may bounce again. The red zones represent bearish order blocks. This means strong sellers entered the market, and price dropped from that level. When price returns to this zone, it often reacts downward. But here's the most important rule. These zones are not entry signals. They are decision zones. You should never enter a trade just because price touches the zone. You need confirmation. Now let's talk about the structure of these zones. Each zone has two parts. The darker area is the active zone. This is where the highest volume of orders was executed, making it the most important part. The lighter area is the extended zone. Price can still react here, but it's generally weaker than the core area. Next, let's talk about the numbers. Depending on your settings, this indicator can show volume, which tells you how much trading activity happened in that zone. Higher volume means a stronger zone. Strength, or score, this is a calculated value based on volume, momentum, and structure breaks. Higher scores indicate more reliable zones. Age, this shows how recent the order block is. Newer zones tend to be more reliable than older ones. Now let's go into execution. For a buy setup, first wait for price to return to a bullish zone. Then look for confirmation, such as a bullish engulfing candle, a pin bar, or a break of a short-term high. Once confirmed, you can enter a buy position. Your stop loss should be placed below the zone. Your target can be the previous high or the next resistance area. For a sell setup, wait for price to enter a bearish zone. Look for signs of weakness like rejection candles or a strong bearish move, then enter a sell trade. Your stop loss goes above the zone. Your target is the previous low or the next support. Now, looking at this specific chart, the lower green zone shows a strong reaction where price moved up aggressively. That confirms that smart money entered there. The middle green zone has already been tested and price reacted again. That makes it a valid area for potential buy setups. Currently, price is moving near a resistance level. So if price pulls back to the green zone around 1.1510, it could present another buying opportunity. And if price moves into a red zone above, that could be a potential sell setup. Now, let's cover common mistakes. Do not enter trades on every touch. Do not trade without confirmation, and do not trade against a strong trend. Finally, for a more advanced strategy, combine this indicator with market structure, liquidity sweeps, and break of structure. That's where this tool becomes extremely powerful. In summary, this indicator helps you understand where smart money is active, where price is likely to react, and where you should be paying attention. And that's how you use volumized order blocks like a pro.